welcome to episode 3 now. We still haven't posted any of them, so who knows which one this is that you're seeing. Whatever we're calling this, dirt road, market talk, something. So here we are in the truck again, in a field, talking grain prices, talking about how that affects you. We'll probably start talking about other stuff because, I feel like we could probably only go on for so long about the same thing every single week.
Oh,
but...
yeah. We got the big heat dome over top of the Midwest today, and it's hot here in Kentucky. Probably, I'd say we're 95 degree or above air temperature, probably. It's pretty unfortunate out there today.
If we look super gross and sweaty, it's because we've been outside in 100-degree heat for
Letting the
the
grain
entire
bins
day.
reflect off of us, just having a ball.
Yep.
So, this week in the grain markets, I think the Pro Farmer Crop Tour is going on, and basically what that is a group of agronomists and farmers and marketers riding through the Midwest, looking at taking a look at corn and bean fields, doing pod counts, doing ear length and population counts, and just trying to get a handle on what they think the crop is going to be. It's more for media than anything. It's hard to get a good handle on what each state has, but I guess they do as good a job as you can. And the market really does take a focus on it the week that this is happening. So if you've kept up with it, it looked like to me that Illinois and Iowa are off a little bit from last year, but the other states, I don't think they've done Minnesota yet. It was happening today, but the other states were a little better than last year. And I think the market is kind of, they kind of had an idea of where they thought the crop was, and it hadn't done a whole lot this week. We've just kind of traded sideways. At the first of the week, the bean complex was up a little bit, and I think we've gained a couple of cents almost every day. This heat is playing a part of that. I think the markets had kind of stopped trading the weather market and had started just basically trading down because of the harvest that was already happening and the harvest getting ready to start. But the heat has got everybody spooked. The marketers spooked, farmers are spooked, and so we kind of saw a little bounce at the end of last week, and I think Monday of this week. Then everything kind of just stagnated, just traded sideways, which basically we're trading in just a couple of cent range either way. And so I hope everybody took advantage on Friday and Monday of the opportunity to sell a few beans and just trying to take some profits, because probably at some point you're going to see during harvest that, just like always, even if the market doesn't fall much, they're going to cut the basis and they're going to try to take as much in as they can for as cheap as possible.
So what you're kind of talking about, how our crop outlooks are they're changing how people are buying now. Why does that happen? Why are we're looking at, hey, these are expectations based on the heat, we're expecting yield loss. So why is that affecting what people are buying now?
So I guess it affects it just because end suppliers have to replenish their stock. So as things are getting used up and going to the shelves, they have to replenish their stock. So as they use product and they have to buy product, as our markets either come up or down, their raw materials are either getting cheaper or more expensive. And dry weather costs the end user money, because ultimately that raw material is more expensive because the supply is less. So as we see this heat dome into the Midwest during a critical time in grain field. Like here in Kentucky, we're mostly finished, but the more northern states still have some time growing in the field, and they are going to continue to need rain. And if you know anything about agronomy, anytime we get over about 90, the plants just aren't functioning like they're supposed to. So they begin, not that they won't produce anything, it's just that they begin to, they mature faster, and so it gives it less time to fill weight on the crop, whether it be beans or corn, and you wind up with less supply. And then in that case, when there's less supply, the price is going to be higher, and so it affects the end user because of that. Less supply out there in the marketplace means a higher price to pay for everyone.
Mm-hmm.
So
So it's good for you if you were never, if you weren't selling anything the next year and you didn't have to store, crop in your bins this year. You're just selling at a higher price. It's good for you. But long term, it's actually not a good thing because you're expecting, less yield next year. Okay, so we have higher prices because people are buying to fill their stocks. Okay, cool. That means you technically get a bigger check, but it's because you are going to have a lower stock, you as the farmer, later on, correct?
that's correct.
Okay,
Yeah.
got it. So got it.
And I think you you never want to see huge spikes in prices or very very low markets either. You'd like to see everything, uh, you know, I guess trade sideways is a good way because if the market's trading sideways, then inputs stay pretty well fixed. They don't spike, uh, and I think it's just better for the marketplace. I'm not saying that you never want some market corrections, but if if the market is trading sideways and supply is relatively steady, then the farmer, when he's buying his inputs, feels more confident that he knows about what price he's bought in his inputs at. He knows what he needs to get out of them, and if they trade in that range, they will have some small market opportunities, but he doesn't have to worry about the market just falling out to the bottom, and he's bought his inputs at a high price, and then he's tried to sell down here where there's no profitability.
Mm-hmm.
It's easier if there's not huge shocks in the system, and you buy your inputs at a relatively reasonable price, and then you sell your grain at a reasonable price, and you don't have to worry about that buying an input extremely high, the market falling out because of weather conditions or whatever happens, and then you selling below profitability. I mean, that's not good for anybody. So,
Okay, so we're in Western Kentucky right now. Okay, you're looking at all the heat. We got soybeans over here. We got corn over there. Okay, looking at the markets. You're looking at all the predictions everywhere else. When do you think you're going to start picking these crops?
okay, so here in Kentucky, I'd say most of Western Kentucky's corn crop will start to be harvested. There will be some early uh, harvested that'll start next week. Uh, the majority of the farmers here in Kentucky will start the following week, and then I'd say it'll be the week after that you'll start to see the soybeans come out of the field. So here in Kentucky, the corn usually comes out first, and then the soybeans. You'll see some that will do both at the same time, but here in Kentucky, mostly our corn is harvested and then our beans are harvested. Um, Both crops are very close to maturity. The beans are starting to drop the leaves. The corn is drying down. A lot of our corn's around 30 right now, so within a couple of weeks, it'll be in the 20s and well on its way to the grain bins.
Sweet. Well, yeah, harvest is coming. Markets will start definitely shifting a lot when harvest comes, right? We're
Sure.
going to start seeing yield averages coming out of different states. And,
Yep.
I'm sure probably in the next week or two, once we kind of have a better idea, harvest is already moving north, through a lot of the more southern states and northern. They're whacking wheat out, they're whacking all the wheat and the barley and all that stuff, all the cereal out west right now. So, but as corn harvest and soybean harvest approaches the Midwest, that's gonna. What do you think that's gonna do?
Well, I mean, I kind of think it's interesting to see with the hot weather what is exactly going to happen to the market. I really felt like at some point we're going to see just the bottom fall out of the market. But I might be wrong. I mean, this hotter, drier weather and lower than uh, I guess lower expectations now with this heat dome than we were having maybe 2 weeks ago, and definitely the crop's not going to be as big as what the USDA has predicted. But I think a lot of that's already figured into the market. So, but if this heat dome persists and we continue to see more crop problems happen over the next 2 weeks, then maybe there's some life in the market and we sell higher at harvest than we could have a week ago. But generally what you see is when supply becomes ample and when the Midwest is harvesting, of course, there's an ample supply. Markets will tend to dive down, and they'll take as much as they can take. Whatever the farmer can hold in his bin, the granaries are going to take in, and regardless of what the futures do, the local bases are going to be hurt at harvest just because there's a supply and they can take it if you don't have anywhere to put it. It's just the way it is. So, love them or hate them, that's what they're going to do. They're going to try to take it at harvest. So, I was just looking before we started talking here, and if you just want to hold your grain right now, I think there's around a 60-cent carry in corn and a 40 cent in soybeans if you're just willing to hold it to to the March contract or the January contract. So there's already some money to be made right now in just holding grain till January and not having to go instantly to the granary with it. So there's pricing opportunities now for profitability just to hold your grain. So
Sweet. Well, I think that's all we got for you. We'll be back in 2 weeks. Probably getting ready to start harvest, shortly after that. So thanks for tuning in, guys. Share this with anyone you're watching with. Yeah, that's it. Thanks, guys.
thanks.